we're here to unlock the path to new home buying. My
Yes,
name's
that's what we
Dione
do.
Branch. I'm Dione Branch with the Lord Dream Homes, brokered by EXP.
And I am Lisa J. White, House Money Mama with Nexa Lending, here for all your financing needs in the mortgage field.
Yes, yes, yes. Yeah, so today it looks like we're going to switch some gears, Lisa.
Yeah, maybe just a little bit. Instead of talking about what we normally talk about in the Chicagoland market, we're going to cross over a little bit. Y'all know 90, 94, 94, heading east.
Right.
What's over
Take us
there?
right on into Indiana.
Indiana, which
Going
some of
back
us
to
refer to as just
Indiana.
basically the south side of Chicago. But
Right. But Lisa and I are both licensed in Indiana, so we want to make sure you guys know that we can help you in Illinois and Indiana if you need it. And sometimes a lot of the stuff that we talk about in Chicago suburbs, actually apply to Indiana as well, right?
yep.
So,
And so today's topic is actually going to be house hacking in Northwest Indiana. So we specifically want to talk about areas like Gary and Hammond, places like that. Those that are really close to us already.
yeah, yeah. So, and house hacking can take place anywhere. Like we're talking about these different communities and areas, but you can do house hacking, wherever. So even if it's not Illinois, Indiana, you, house hacking is something that you could do to get you started with your investing. Right?
Absolutely.
So let's start with the basics, right?
Okay.
What does house hacking really, well, like what does that mean, right? So house hacking is kind of like you live in the house,
Mm-hmm.
right? And you rent out a part of the home, a room, a basement,
Yeah.
extra unit, second dwelling, or something like that, right? So you're actually living in the house and renting out a portion of your home, right?
Right.
So the whole goal of it is to reduce your monthly housing costs, right? Your expenses and stuff, sharing it with others, so that it can make it easier for you. Um,
Absolutely. So then you don't have to wait and say, well, I want to become a real estate investor one day.
right.
House hacking allows you to start right where you are.
Right now, and that's the thing, right? So a lot of times, we talk to people all the time. I was thinking about being an investor, but I don't know where to start. Just start with house hacking, right?
There you go.
So that's a good way to doing it. And just like we said, it's just that step into the investment space, right? So getting
Absolutely.
you there.
Yep. It's a good stepping stone. Absolutely.
Right.
If you're
So
wondering where to start. But why Northwest Indiana?
well, Northwest Indiana is attractive because it may offer more affordable entry points as far as the Chicagoland is concerned. So
Yeah.
yeah, some buyers find that the lower purchase prices, that's really what investors look for, like a
Right.
lower price. And so you
Right.
can find those in some areas like Gary, Hammond, Maryville,
Hmm.
East Chicago,
Right.
and
So we
some of
hear
those
that all the
surrounding.
time. Yeah, we hear that
Hmm.
all the time. People kind of get priced out of certain areas, especially in the south suburbs with
Yeah,
the taxes.
yeah.
And sometimes you can find, a house is just as pretty. It may cost about the same, might be a little bit less, but the taxes on the Indiana side would
Are
definitely be
way
a lot
cheaper.
less.
Yeah. So I
Yeah.
get lots of people nowadays, they were interested in some of the south suburbs like South Holland, country,
Yeah.
Calumet City. Those are areas that are close,
Madison.
to
Yeah.
Indiana, right?
Mhm.
And but the taxes are like $8,000-10,000. And so then they find themselves going, well, what about Indiana? Maybe I should check that out. So
Right. And actually, Gary is one of those places that has really gotten a lot of investor attention over the
mhm.
past few years. So they it's, it's a slow path, I guess you could say. But just because investors are buying there, it doesn't mean every property is a good deal. You still have to look at what that would how the numbers would fall out. Some homes may
Right.
need some repairs. Some areas may have challenges that they haven't quite overcome, even though they're still working on building up. But you know how it is. We talked a little bit about gentrification and
Hmm.
neighborhoods changing and things like that. They're changing that area by building up these properties and attracting different people that can afford, the higher price homes now in that area. So yeah.
Yeah. And it's good to get in at the lower price, right? So,
Mhm.
we talked last week, like Lisa mentioned, we talked about gentrification and getting
Right.
in at a good price, but not running there just because somebody told you, but actually
Right.
looking into it and saying, oh, okay, I do see these communities are kind of on the up and uprise, right? And looks like a good place for me to go ahead and start with my investing and stuff. So
Hmm. Excuse me. And Gary does have a lot of older housing, houses, and that does create a pretty good opportunity, even though they may need renovation, like we talked about. But it is attracting a lot of the investors. They're fixing and flipping. You have owner occupants that are starting to think a little bit differently. Excuse me. I'm sorry. I think I need some water.
hmm.
That's what I'm here for.
Right. Get
I
that
think I
sip
need
of
some,
water.
right. I need the real water though, not just the real estate water.
Right, right, right. Uh, so yeah, Lisa was just while she trying to get some water. She was talking about, some homes may need some renovation. The investors attract with the lower, with the lower price. Because that's, when you're an investor, you go out, you start out with a lower price home. So then
Yeah.
that way you can have your return on your investment, right? So
Hmm.
then you can fix and flip activity can actually signal that there's a lot of opportunity. So, like we said, make sure that you do your research, looking
Hmm.
into it, making sure that the communities are actually, up and coming. So,
Right.
mhm,
Absolutely.
right, so that
Um,
the investment is worthy. Right.
Yeah. So, and just kind of to place things where they should be as well. It is a different mindset because house hacking is not just buying the property, but it's buying a property with a specific plan in mind. A flipper might say, "Can I renovate this and sell it quickly?" But a house hacker may say, "Okay, can I live here safely? Can I afford this payment? Can this property produce income? And is the rental set up legal?" Because that's kind of important too. Can I
Hmm.
manage being both a homeowner and possibly a landlord at the same time?
Right. And
Those
that's
are
a
things.
that's a whole different mindset, right?
Yeah,
So besides getting in, flipping it, and selling it real quickly, you're
right.
investing to at least be there of 1 year, at least 1 year. All
At
right.
least. Yeah.
Mm-hmm. Yeah.
Plan on it. Yep,
Yeah.
absolutely. So
So
what about
based
some
off
house
of your
hacking?
financing guidelines, go ahead.
Yeah. I was gonna say, what about some house hacking strategies for Northwest Indiana? You got any?
Well, yeah, let's see. You could buy a duplex and live in one unit.
Okay.
Yeah, yeah. You could
I
buy
like
things
that idea because then you don't give up
your
your
own
privacy.
space.
Right.
Yeah, yeah,
You
your
still got all
own
your own
space.
space. It's still like your own
Mm-hmm.
house. You don't have to see them, coming out the bathroom, they
Right.
towel
And a
on.
lot of times, I mean, it's good to start with the duplex and, be able to rent out one of the units, but sometimes maybe you just can't get there right away. So you could buy a single family home and rent a room, right?
Okay. Yep.
Uh, you could buy a larger home and create rent rental income. So maybe
Mhm.
like same thing, renting the room, but you could rent the basement too.
Yeah.
Um,
You see that a lot on what's that thing? Verbo or whatever it is. Like you see that a
so
lot. People
yeah,
actually would they'll live on one floor, but they'll rent out a whole floor. So you
Mm-hmm.
get the, and sometimes they even have a separate interest because, you know, people like that. You can be able to go in
Yeah.
on your own, but you
Done.
still have access to that, that part of the home from your area. But thank you. I got water now. But you would have, you would still have access, but the other person who's going to rent from you, they could have their own entryway. You know, sometimes people are able to do that. If you can't, obviously you can still make it work, but just the thought of just allocating the entire floor to a renter so it feels more like their space.
Their space, yeah. So you could buy a property that has future rental potential after
Hmm.
repairs, right? So you look at something that's costly, cost effective.
Yeah,
You're gonna put some repairs in there, maybe even do like a 203K loan, because the 203K loan means you're gonna actually live in the
yeah,
house,
right.
right? So that's what we
Mhm.
said, got at least live there for a year or so, right? And with some
Look
of
at
the
this
different
lady doing
finance.
this lending stuff.
Right. So, right. So that's the thing, and then you want to consider the proximity to the transportation, the schools, the employers, hospitals, so that gives your property more value too. So
Yep.
it attracts more people, because if your renter doesn't have a car, they want to be able to get to transportation. They want, maybe they have a small kid or something like that. They want to be
Mhm.
near the school, or even they have a little dog and they might want to, be able to walk them at the park. So,
Yeah, yeah,
mhm.
absolutely. Another thing that's just taken into consideration, because I'm a numbers girl, so you want to think about how those numbers are actually going to work. You know, the
Mhm.
rental income that would be actually offsetting your mortgage. A lot of times people don't know that when I qualify you for a mortgage, if you're buying a multi-unit, then I can use the rent that you expect to get from those other units in order to help you qualify. Excuse me. Now I only use a portion of it. I use 75% in order to be help you qualify. But those numbers do, those are numbers that you definitely want to take into consideration. I would even take that a step further, you know, and say that obviously you want to maximize your rent to at least get the amount that, if you can, usually the goal of a person would be that the rent would actually cover the mortgage. That's normally the goal. Like if you can get, you know, your mortgage maybe is, I don't know, $1,500 in this area, you know, because obviously taxes are not as high what we're talking about
Mhm.
right now. So it's possible to get a mortgage that may only be $1,500, or maybe you can charge $1,500 for the rent. So now your mortgage is basically covered, and then that way you can utilize your income in a different way that you normally would have used for the mortgage. You might even want to put aside $1,500 every month, just like as if you were paying the mortgage, and that could build up a safety, you know, a nest egg for you, and then that could take you on to different other strategies that you consider for investment. But I do want to be clear, because not every income strategy can be used to qualify for the mortgage. There's a difference between the income you hope to receive after the closing and the income that the lender can actually approve, you know, and use for the loan. So the lender is
Yeah,
going to look at the loan program.
you're
So
right.
is it FHA?
Mhm.
Is it conventional? You know, property type, rental history. If there's already been somebody that's been, you know, has been leased before, if there are lease agreements available, we'll look at all those different kind of things, and occupancy rules as well. So don't build your plan, your whole plan, on just imaginary rent, because we are going to need to look at real numbers, guidelines, and real documentation.
Okay, all right. So yeah, that's very important. Lending is a very important part of the whole plan. So
Yep.
Lisa and I always talk about plan and prepare, right? So this
Hmm.
is where you speak to us and share with us your plans, and so then that way we can help you prepare for them.
Thank you.
All right. So Lisa, did you go
Absolutely.
over the financial options already? Did you talk about those?
Not really so much in detail. I mean, I mentioned them, like for example, you can use FHA, like how you mentioned, if you
Mm-hmm.
mentioned FHA 203K, because that would be like if you found a place that you were planning to fix up on a little bit. the 2 or 3K loan be perfect for something like that because it is an FHA loan that's specifically designed to help you acquire the home and then put aside funds for you to be able to repair, fix up, improve on the home as well. So that's one type of financing. Anything for owner occupied, it could be just a regular FHA loan. It could be a conventional loan. It could even be a non-traditional financing, like, a bank statement loan or P&L for those of my people who are self-employed. So we could use any of those options. They'll have different um, down payment requirements. Like, FHA does have the minimum 3.5%. And actually keep this in mind too, even though you may be buying a two unit, maybe a 3 or 4 unit is possible, right? But because you are going to live there, there may even be some grants or down payment assistance. I don't like to say grants, but down payment assistance programs that you may qualify for that could help you to get into the home as well. So that's something to think about too. And
Mm-hmm.
in any market, but specifically, we're talking about the Northwest Indiana. The condition of the property can make or break the financing. So a home
Mm-hmm.
might be listed at a great price, but if the roof is bad, utilities off, safety issues, and need major repairs, then one, a regular loan may not work, and two, you might want to more heavily consider how whether or not that's going to work in your overall plan.
Yeah. So when you're buying, you can't just fall in love with the price, right? So you got to look a little bit more into it. You got to understand that some work may need to be done. So whereas your price is lower, but with that rehab loan, they can actually take in all the improvements and
Yeah.
actually put it into your loan. So then that'll make your loan a little higher, but
Oh
that'll
yeah.
guarantee that the work on the property is actually done. So it's a good thing. So
Okay. So what do you look for as a realtor, Dion?
yeah. So as a realtor, we want to look at the property condition. We want to make sure that the house is foundationally strong, right? Because
Okay.
depending on the house, we want to make sure that sometimes it could just be cosmetic issues, but it could be something a little bit more structural issues. So you do want to kind of check those out.
Okay.
You want to check out the layout, your privacy between the living spaces, because you're going into this as a house hacking. So you're thinking about how can I make my space private, right? What
Yeah.
are the areas? How do we share these common areas and stuff?
Mm-hmm.
So number of bedrooms and bathrooms, right? So that
I would think
determines
that'd be pretty important. Yeah.
right. That determines how many people you can actually hack into place, right? So maybe you want to have three, roommates, right? So that means you're
Mhm.
looking for like a 4-bedroom home, right? Things like that. Parking, very much something that you want to consider because there's a
That's a
lot.
good idea, right? Because if it's you and somebody else, then y'all both got at least one car, more than likely. Yeah.
All right.
Mhm.
So you got to make sure everybody is able to park okay, right?
And who gets the
Um,
garage?
huh?
I
Who
said, and
gets?
who gets the garage?
Well, I'm the owner. I get the garage, right?
Okay.
Unless I'm renting it to you for additional costs.
Okay, there we go.
Right. So neighborhood rental demands, right?
Mhm.
So is my neighborhood that I'm going into high in demand? I mean, hey, everybody's trying to get into this community, so this is a
Mhm.
good place that I can hack because I can actually bring people in. They don't have to be a homeowner. Maybe something like I know we're talking about Indiana, but Bronzeville things comes to my mind in Illinois
Okay.
when I think of that.
Okay.
But nearby employers and transportation, how long does it take you to get to work and your target audience? Like, how long does it take them to get to work? Maybe you're buying in an area that's close to something like the Ford plant, right?
Hmm.
So now you know that there's a lot of workers over there that may want to live closer to their jobs or to the gas plant, right? So there's a lot of different things where so you could probably have renters where they can come in, they work at one of those factories or things like that, good opportunities there. So,
Yeah. Yeah.
right.
Smart.
Right. Is the property appears legally zoned for the intended use. Right.
Okay.
Right. So we talked about that, and whether repairs may affect your financing. So Lisa kind of mentioned that, right? Where if you're purchasing a home and it needs some repairs, you can't just really do a general FHA loan. You have to do what we talked about a little bit earlier, like a 203K loan. You
Mm-hmm.
could do a conventional financing because conventional typically doesn't care about as much of the repairs
As
that need
much,
to be done.
right.
Right, but if it's in really bad shape, you might not
Yeah,
even
you
be
might
able
not
to.
pass conventional
Right.
either. Yeah.
So yeah, and so yeah, so and then I think a big thing that you should always look at whether you're hacking or just buying a property is what's my resale potential.
Yeah, absolutely.
hmm So I think that that's a big one, especially sometimes I may have people, oh, I just want a two-bedroom house. They're like, well, I'm like, when you call me back to sell, I'm gonna have a hard time. Right.
Right. And if I have a hard time, that means you're gonna have a hard time
Right.
because you're gonna be ready to move, and
Yeah.
we can't because we can't sell your house.
Okay, sell your house. Right.
Yeah, because
Mm,
most people are at least looking for 3 bedrooms. Most people.
yeah, yeah. You get
Yeah.
very seldom that somebody's looking for it too. A lot of people
Mhm.
are nowadays say you could look for it too, but it because two will cost less, but then maybe you put two bedrooms in the basement. So
Mm.
now you have a four bedroom, a two plus two, so four bedrooms. Now your market value is actually different than what you bought in the beginning. So that's always look at the property and see what can I do with this property? How can I make it where I can make more money?
Yeah. So let's talk just a little bit more about some of the numbers because we didn't really get to the monthly payment.
Mm-hmm.
Rent and mortgage payments are different. So the rental payment obviously is just one amount that you pay. The mortgage payment, though, is comprised of about five different things. You have principal, interest, property taxes, homeowners insurance, and if you put down less than 20%, then you're usually going to have PMI. So you have five different things. Um, Most of those things will not change, but two of those things can potentially change. Like for example, your homeowners insurance and your property taxes can change. So it's important to keep that in mind. Also, depending on what area you're in, you could even have to take flood insurance, or if
Mm-hmm.
you end up being in a place that is run by an association, then you would have HOA dues as well. So those are all things you need to keep in mind because you want to already know that this is the minimum amount that you're going to pay, but then you also have to estimate for utilities, repairs, vacancy, because it can happen. That's why we don't use 100% of the rent amount to qualify you with, because it can happen that your other units is, or the portion of the house, the unit, I should say, is actually vacant for a period of time. If that happens, then obviously you're not collecting rent. And when you're not collecting rent, then that's, money that you don't have that would normally have been in your budget. So you want to keep that kind of stuff in mind too.
Yeah.
Um, Property management, if you don't plan to, do it yourself, you want to have somebody else that deals with the tenant, then that would be an additional fee. I would think if, for house hacking, you probably wouldn't do that. Most people just kind of deal directly with the person.
Person. Yeah. Unless you don't want the person to know that you're the owner. Some people want to do that, right? They want to live in the house with the other people as if they're a tenant, not really
Oh,
let them
right.
know. Right.
Like,
Now
yeah, so
let the
y'all
people
can sit there and talk about the landlord together.
exactly. Well, that landlord is really bad.
Right.
But they really do need to have some realistic numbers. So always make sure you're going in with the understanding of how you plan on using the house, and then what are my numbers? What am I gonna get on a monthly basis? Is it gonna cover all our needs in order to pay the mortgage, any
Right.
additional bills and things like that that you need.
Right. And I think a really important thing to remember or to calculate and factor is okay, if for some reason my house hacking plan does not work, if it's a complete flop, if I never get a renter, can I still afford this mortgage?
Correct. On a monthly basis.
Yep. Can I still afford it? Because we don't want you to set yourself up to lose the home because things don't go according to plan. So, yep.
Well,
Let's talk about some mistakes. What are some common mistakes to avoid?
let's see. Um, well, buying the house only because of the price looks good.
Mm.
It looks low. I'm gonna buy it, right? Underestimating the repairs, I think it's always good when you have a property and you're purchasing and you know it needs repairs that you at least have two contractors come out and give you an estimate of the work.
Yeah.
I think a lot of times people go, "Oh, we don't need a home inspection." I think you always need a home inspection, no
Hmm.
matter what. If the house needs a lot of repairs, and then you just can go with the contractor, and the contractor can give you an idea of the work that's needed and stuff.
Hmm.
So, assume every property can be rented. And
Okay.
maybe it can't be right. You can ignore the local zoning rules. I don't do that, right? Last thing you want to do is have renters in and somebody knocking at your door telling you that you're not supposed to have a renter, right?
Right.
So that's where
Right.
you gotta look at the HOA information, and maybe if it's one of those communities, can I have a renter? Can I sublease out?
Yeah.
Just like
Yeah.
things like that, so it can
Yep.
clear. Can I Airbnb my house? A lot of people want to
Right.
Airbnb just a room in their house and stuff.
And
Um,
you don't want to make enemies of your local government or
the-
your association.
no, right. It could be terrible. It
Yeah, just
says
don't do
not checking
it.
the taxes and the insurance early.
Hmm.
So taxes are not, well, the insurance is also kind of changed, right? Whereas I've
Hmm.
noticed a lot of insurance is a little bit more than others. They run your credit in order to determine what your insurance is. That's
Hmm.
something I didn't know. I was like, "Ooh, you ran my credit."
Well,
So
and it's not the same as like when I pull it as a lender. You know, it's a different report. It's more like a consumer report, but I
yeah,
mean, it's still
still pulling my credit for it.
yes.
Just never thought that. Not understanding the neighborhood block by block. I mean, hey, we talk about this all the time. You're buying a house in the area. I'm gonna drive around at 2 in the morning. I'm gonna drive around at
Right.
midnight. I'm gonna
Right.
drive
10 o'clock
around.
at night. Yep.
Right. You
Because
want to
9 a.m. don't necessarily tell you much of a story.
Not at all. Not at all. There were two buildings that were right next door to each other. I was like, wow, both buildings for sale right next door to each other.
Yeah.
Oh, that's a great deal, right?
Mhm.
The house prices were just right. I was looking for myself at that time.
Okay.
So I'm driving down the street with my father in the car, right?
Uh-huh.
And so of course, we're driving slow because we're looking at the building.
Yeah.
Where these five boys come out to the car for?
Came out to your car. No, they
Yeah, they were trying to do a transaction.
didn't.
No wonder they were selling their two buildings next door to
Right.
were next door to each
Dang.
other. I was like, and of course, my dad was like, "Oh no, D, this is not the one." This is not the one. I said, okay.
I'm sure he did say that right away. Yeah.
Right. It was like, no, dude, this is not the one. I said, so you got to kind of drive slow down the block. Just
Right.
saying. Take it a little slow. See what happens, because you
Drive
never
slow
know.
down the block and see what happened.
Right. I was like, oh my goodness, never had a clue. I didn't purposely do it, but now I know,
Now
right?
you know. Yeah.
Hmm. So,
What
yeah.
about tenant screening? Because
Oh, that's a big one.
yeah.
You should always screen your tenants. Sometimes the tenants they know the laws better than you do. You're
Girl.
going right. You're going into this new. I would suggest joining some rental communities and
Hmm.
understanding more about investing, because some of those communities, they have people you could talk and ask to that have years of experience,
Yeah.
because the tenants, they know the rules, and you like, I have no clue. And unfortunately, a lot of states, some states, Illinois is a tenant state.
Yeah.
Indiana might be a little bit different, but they still have their rules and guidelines that you need to follow as a landlord. And so those are
Right.
good things that you should definitely look into.
Absolutely.
Mhm.
So, who do you think would be a good fit for house hacking? Because obviously, it's not for everybody. We give this
Mhm.
information because for who it's applicable to. Then obviously we want you to be able to take advantage of it and have as much information, education about it as possible. But it's really not for everybody. So let's talk a little bit about how we know if a person is a good fit or not.
Right. Do you like to share your space with other people?
No.
So you may not be a good one. Right there. That's number one. Can I share my
Get out,
space with
get
somebody?
out my face. Get out
Right.
my space.
Get out my space. That's number one right there. You can't share the space, then maybe that's not the plan, right? I'm just saying, because this person is walking past you, and you deciding you're not gonna speak to them today.
That ain't right.
That share space could go wrong real quickly. Let's see. Buyers willing to learn landlord basics, right?
Okay.
We talked about that just a minute ago.
Yeah.
Join groups and communities so you can learn more about it. Buy with a long term mindset, right?
Okay.
So, you got to know, okay, this person, I'm going to be here at least 1 year, maybe, two. Guidelines, um, mortgage guidelines mostly say a year. So
At
just keep
least.
that, yeah,
At least.
yeah,
Yeah.
yeah. Yeah. So keep that in mind. Um, who can handle the repairs and the surprises?
Yeah. If you're
As a
not ready for
landlord,
repairs and surprises, yeah.
oh
Yeah.
my God, I think that is one of the, as a landlord, that's one of the things that worry me the most, right? That
Hmm.
call, as soon as you see that tenant phone ring, you're like, hello? Oh God, like what? The furnace is not working and it's below zero outside.
Right.
Right.
Y'all
So
don't
you,
have kerosene heaters. Can't y'all plug in?
oh girl, then they gonna burn your house down. Right. So but that's the thing, you got to be ready, to have, so it's always good to, you're going into this, start looking at who are your handyman, are you experienced with making these repairs and
Oh, it
changes
is.
that you
Yep.
need to do you have the time to constantly go by the building, check it out, make sure everything's okay, or who you gonna have in that
To help.
role,
Right.
to
Yeah.
help you, and are they available to do that, at a moment's notice, because the basement is flooding for some reason and you don't even know why. Lord have mercy.
Hmm.
Right. So but good person is, you want to build wealth, right? You're looking at
Through
build.
real estate.
Right, through
Yes.
real estate. So you're looking to build wealth, and so this could be definitely a good plan for you.
Hmm. Now, who's not a good fit?
Well, we already talked about those total privacy people.
Right.
Right. Like, I don't know. I don't want to do that.
I don't want to share my space with you. What? Ew.
Right.
Right.
You're not a good fit. Not you. Right. So,
Right.
right.
Scratch that off my list. I guess I won't be able
Mhm.
to do
Right.
that.
Always make sure you have some savings. If you don't have any emergency savings, that's not good because
Okay,
you
yeah,
never
scratch that
know,
off my list.
right?
Yeah.
You never know they're gonna pay their rent. If there's an issue, you have guidelines as far as getting that furnace back up and running, things like that. So you got to make sure you have that emergency savings funds available. Um, does not want tenant responsibilities.
Oh man.
Why you in this? Why you why you in this? We don't want you. You right. You don't want to do this. So maybe no,
Dang.
don't look at that. Right. And relying completely on the rental income to survive. So
Ooh.
yeah. So the rental income maybe in the beginning may not actually be that um plethora of money for you in the beginning. It could
Yeah.
provide you some income, but not a lot. And so if you don't have, if this is your only way, it might be a little difficult. So,
Hmm.
mhm,
So I always tell buyers that hacking is really part home ownership, but it's also business ownership too. And it's a
mhm,
big part people management. So you're not just buying the walls and the windows, but you stepping into landlord responsibilities. And that doesn't mean that you should be afraid per se, but it
right.
does mean that you should be prepared because you have to
Mhm.
keep all these things again, like Miss Dion said earlier, you have to have the mindset for that. Because I think the more you know about what you're getting yourself into, the easier it is to handle when different things come up. You can deal with them better.
Yep, yep, for sure, for sure. All
Hmm.
right. Well, Lisa, we've been here for a minute now. I,
Oh, we surely have. I didn't even
mhm,
notice the time. Oh my goodness. Okay, we better go ahead and wrap up then.
right.
Um, you want to
So,
hit just a couple more quick little things? So, for example, I do have a quick mortgage moment. Before you go house hacking, get fully pre-approved. Make sure that your lender understands what your strategy is because not every lender knows owner occupied multi-unit financing and rental income calculations and renovations and all that kind of stuff. So make sure that your lender, me, fully understands what it is that you're trying to do so I can set you up for the best path possible.
all right. So what I'd say is put hacking in the comments below, and then we can send you a little PDF on how
Checklist.
to begin your house hacking. All
Yep.
right.
Your
So
house hacking checklist.
your house hacking checklist. And so again, my name is Dione Branch, and I am with Allure Dream House, and I can be contacted at 773-819-6092. So I'll just give me a call if you have any questions, just give me a call.
Absolutely. And that's me, Lisa J. White, next to lending.
Excellent,
You
right?
changed it. It's lending. Was it lending last week?
Yes, it was.
Oh,
Yes,
okay.
since
It's
they've changed,
lending again.
right? Since they've changed, it's been Lindy. So, all
Okay.
right, guys, we want to take a moment to say thank you for joining us. We're excited that you come every week and keep on coming. Talk to you
Every
later.
week. Bye, everybody.